institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals: knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals? knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the Kunming-Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities, In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a greater impact in major international debates, and to contribute to the implementation of the SDGs, the Paris Climate Agreement, and the coming Montreal Global Biodiversity Framework. Our goals? Knowledge sharing and capacity building among the IDFC institutions, enhanced collaboration between members and partners, and pursuing advocacy on the role of public development banks. How does it work? All year long, the club is working on contributing to the international agenda, coordinating working groups on SDGs, gender, climate, and biodiversity, releasing common strategic and operational publications, and reporting their annual commitment towards climate and biodiversity. IDFC. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond.
Hello everyone, great to see an amazing audience, and I'm sure that a lot of people are also following the live stream, so good afternoon, good evening, wherever you are in the world. There has been a theme going on very heavily during this COP, every single day, every hour of the day at multiple places around climate finance. So the gigantic amount of investment that is still needed on this topic today and in the future, with an importance which is only growing, makes this topic central. The good news is that the amount of investments has been growing during the last years, plus 10% yearly on average. The bad news is that it needs to grow much faster because we're not there yet. We need to go from plus 10% to plus 30%. That's easily said than done, because this isn't new. And still we can ask ourselves, why haven't we achieved the plus 30% or equivalent in the previous years? The reason is quite simple. There are many barriers to this. Some of them are linked to the complexity and the nature of risks. Some of them are linked to the volume and amounts of investment that is needed. Some of them is linked to the patient capital and impatient capital and how we build bridges between the two of them. And some of them are linked just to knowledge capacity gaps that we have across the globe. The other thing is that this gap is so big that it's present everywhere. It has a nature or a geography nature. We have gaps in mitigation, we have gaps in adaptation, and we have gaps across almost every single sector. So to talk about this topic and to talk about the role of development finance institutions today, we have a great panel with us. So we have Wendy Woods with us, BCG Vice Chair in charge of sustainable social impact and climate and sustainability. We have you, Stefan Wendels, the CEO of KfW, and we have Adamasu Tadise, the CEO, President Emeritus of TDB, Trade Development Bank. Thank you for being with us. And I am Amin Benayad, a Managing Director and Partner at BCG, looking after our climate and sustainability practice for financial institutions globally. Please welcome our panelists. We will have 3 moments in this discussion today, 3 keynotes. We propose to structure this the following way. The first keynote will be given by Wendy, and Wendy will talk about our joint paper with KfW around the climate financing roadmap and how DFIs can build bridges to unlock the private capital. Then we will have a second moment, a second keynote by you, Stefan, around the role specifically of KfW as a transformation agent and as a promotional agent in this whole ecosystem. Last but not least, Admasu, you will share also in your keynote your perspectives on the mandate of DFIs globally and how they can ensure to measure the measures for socio-economic development, that these measures continue to be also climate positive in the long run. Between each keynote, we will have Q&A. I will be asking some questions and we will open up for audience questions at the end. I hope this works for you, and let's start with you, Wendy.
Thank you, Amin. And I am so pleased to be here today and presenting the joint work that BCG and KfW have done together in our partnership. Let me get to the right starting point here. We have been working the last few months on a publication together. We all know the challenge is moving more money more quickly to the right places. That is not an easy challenge. We know we need more instruments, we need more innovation, and we need more ways to both de-risk the funds that are going to flow if we're going to get more private sector money flowing into those. And we know we need to build the partnerships on the ground that are going to enable the development of the project pipeline that is actually bankable, that is actually appropriate for private sector finance. So what did we do as KfW and BCG to actually help push the thinking and the themes on this? Well, the first thing I want to talk about is we tried to provide a big picture perspective on the issues, the challenges, but more importantly, the levers that we can all use that are going to accelerate the private sector investment. We realize that this is by no means the last word on the topic. There is a lot of innovation that we are going to need to do from here. And frankly, we relied very heavily on this work, on the bright spots of innovation that are happening in many DFIs around the world. And so please take this as a collection of what is happening in the best circumstances and a challenge, frankly, to all of us to continue to push the envelope on what we can do together. So what does this challenge require? What does it mean to move more money more quickly to the right place to leverage both the public funding that we have, but leverage and improve and expand the amount of private sector funding? Well, from a DFI perspective, it means at least two things. It means transforming the way we think about our business model, the products and services, our strategy, our impact, and frankly, the way we distribute and cooperate to do that well. It's the business side of a DFI model. But there's also an operating model. The only way we transform our business and the products and our offerings is if we also transform our operating model. How do we think internally about pushing the flexibility, the adaptability, bringing in the newer tools that we need, digital, to accelerate the knowledge base of our teams, filling those gaps and enabling us to pivot more and act not just on what we think we should do, but what we can learn and what we're actually delivering. Performance-based incentives on mobilizing private capital, not just getting the public capital out the door. There is so much we can do both on the business model side and on the operating model side. I want to get into just a little bit of that now. And Amin kicked it off very well. We all know the challenges that are existing. Frankly, what makes it even more complex is that, frankly, all of those challenges are interrelated, and they play on each other to make any one of them harder and harder. But if we think about what we can do on the business model transformation side, how do we expand our products, our offerings to deliver more and to deliver more on the private finance side, not just the public sector side? How do we think about that? We've all been hearing about all the risks. Technology risks, regulatory risks, foreign exchange risks, and country-specific political risks, right? It's our collective challenge to find ways to mitigate all of those risks. But if I think about some of the things that I've been thinking about and hearing most about this week, let me just highlight one. And I want to talk about that currency risk, the foreign exchange risk that we all deal with, right? The most innovative DFIs, how do we actually do more with hedging that currency risk? How do we think about learning from what IFC is beginning to do, MIGA is beginning to do, to actually create better hedges, better guarantees, to actually manage more of the currency risk, and in some cases with MIGA, the political risk that we're seeing? How do we expand that piece of our portfolio? How do we expand the consortia side of our portfolio and build those platforms where we can work together to take products that we know have potential, but aren't yet investable, aren't yet bankable, to actually develop those projects together to a pipeline that is investable. One of the things that I'm excited about is one of the things that's been coming from the US side of things on the Energy Transition Accelerator. US State Department and a number of foundations working to figure out how to bring private sector financing to decommission coal, build renewables across the low-income countries. Can the DFIs play an even bigger role in things like the ETA? To do that, it means thinking about our impact measurement differently. I mentioned it up front, but it's about thinking about impact measurement in a predictive sense. Can we use the latest tools to understand better what the likely impact of our funding will be, and therefore tailor our funding to the places that will actually have even more impact? Can we actually do more to create more transparency around the impacts that we're having? And frankly, be willing to hold ourselves even more accountable for delivering that impact. For that distribution model, how do we bring in more digital? It can create the transparency, but it also can create those syndication platforms that enable us to distribute even more effectively. There is so much we can all do enabling public financing to catalyze when we're much, much more innovative and adaptive. But I said to do that, we need to think about how we actually change the operating model. How do we change the incentives for how we work? How do we actually, as I mentioned, create incentives based on not just the finance that public institutions put out the door, but what gets mobilized on the private side? We know that we can actually track that now. We know we've got the tools to understand what we're catalyzing with public finance. How do we make sure that we create the incentives for the ultimate impact measures we want, not just the intermediate steps along the way? How do we harness that technology? How do we actually cultivate talent? How do we actually fill the knowledge gaps? There's so much we can do by leading with flexibility, adaptability, and the right incentive structure around this to really change the way that our organizations all work. Now, there are ways that the public sector can help too. And one of the things that we've spent some time on in this publication is thinking about the dashboards. And most people think, oh, reporting, it's a boring piece. In some ways it is, but creating the transparency, creating the visibility to target the investments by sector in the places that are going to make the biggest difference, actually really thinking hard about the measures and the KPIs that we need to be tracking, and actually making sure that we are constantly tracking the ultimate numbers on where we're getting in terms of where Amin started, with what kind of coverage do we have against the financing needs on a sector by sector basis in the areas that need to be decarbonized first. There is so much that we can do together. One thing that we've learned very clearly from this report is there are tremendous bright spots with every institution that we talk to. And we did many conversations to inform, many interviews to inform this report. But frankly, those bright spots aren't proliferating nearly as quickly as possible. So how do we actually proliferate the bright spots and the leading edge of what's happening within every institution? And then how do we come together to push the boundaries of that even further with what we all do together? Thank you very much. I'm going to hand back to you, Amin, and I think you're going to get all of us up here if I can invite Stefan and Nadmasu to join us up here.
Yes. Thank you, Wendy. Thanks a lot. Stefan, can I invite you to join us on stage? Thank you very much, Wendy, for this presentation. So, two topics. I think you laid it out very well: the business model and the operating model. And Stefan, I'll go back to you first, maybe on the business model part. As Wendy shared with us, the products and services portfolio can be also an enabler to lower some of the barriers that this topic is facing. Could you tell us, Stefan, a bit more about how you concretely do it and how you concretely make it work at KfW.
Yeah. Good morning and good afternoon, good evening to those who attend us via video. KfW is the largest, outside China, largest DFI, if you want, the national DFI in the world, with 40 billion of equity, more than 600 billion balance sheet, which gives us a relevance, which I think is important to use in this decisive moment which you described, because we need to speed and scale. And nevertheless, it's a marathon. KfW looks back to 50 years of experience working together with private investors, and that is a big advantage. And the challenge which we face is how do we reduce those barriers which Wendy described. There are certain risk categories which are outside a responsibility of a bank, and there are certain risk categories which we can address. And to address the investment risk, we have made great experience with blended finance, of course. But blended finance, i.e. taking the first loss piece in a certain fund, is expensive. It's expensive from a government point of view because the risk of the second layer is not always appropriately priced. And that's a big challenge, in particular in Global South or emerging markets. The cost of capital is simply high, and there is a lot of misunderstanding of investment requires if you look at the data. We have more than 1,000 investments globally in terms of equity. It's a fine portfolio, but to attract private equity is still a challenge. So blended finance will remain definitely important. Secondly, I think cooperation with insurance companies. That's an area which is underdeployed, because banks and insurance companies often do not speak the right language. But if you want to reduce the risk, better speak to the insurance industry. They understand the risk, and it's their task to price many risks which we face. And climate risk is a big factor, increasingly in terms of the overall cost of capital. And thirdly, I think it's important that we create scalable opportunities. Investors love size and liquidity. And little projects, it's very hard to attract private capital. So if we jointly can, with our partners on the ground, and you said we need partners on the ground to make these projects bankable, size, liquidity matters, and therefore often also country initiatives are important. And last but not least, fourthly, I strongly believe and see a paradigm shift in terms of cooperation and collaboration. We have more than 250 DFIs globally. A lot of DFIs have an independent strategy, and we are much stronger together. And let's win together than losing alone. Let's jointly prioritize and employ the scarce resources which we have in order to attract as much private capital as possible.
Thank you very much, Stefan. We'll come back to the DFIs with you, Admasu, but let me follow on with one question. One of the points you made around scale and around the fact that small projects, many of them, won't make a difference when trying to talk to private sector and private investors. Could you share more with us on what are the impediments and what are you trying to do to reach that scale?
Yeah. What we try is, of course, firstly, we work with prime partners and global asset management companies, whether it's Allianz Global Investor or BlackRock, name it, because they have access to large pools of financing, and that is the starting point. Secondly, I think, based on my experience in more than 25 years in banking, we should listen first to investors, what they need in order to invest. It's not us to define what they should do. They take the decisions, and they have often investment criteria which is not well understood on our side or the public sector, because we haven't spoken with each other. I come from the private industry. I'm used to work with investors, listen first, and then design the product. And thirdly, I think we should encourage pan-country, pan-regional cooperation to make scalable project and think through the value chain end to end. The large private equity firms, they go for size. They simply go for size, and to set up a fund of size. Let's take Africa. To set up a Pan-African fund in terms of 10 billion for SME projects, it's impossible at the moment to attract capital in that amount because we even don't have the data. We don't have the track record, we don't have the history, and professional investors need the data to assess the risk and then start. So I think we can do both, like KfW has smaller funds in Latin America and Africa and in Asia, which we want to scale slowly. But in addition, we have large-scale project via KfW IPEX, where we strongly believe.
Great, thanks a lot, Stefan. Admasu, let me turn to you. Leading the Trade Development Bank, you are in a special place to see the flows across the corridors and to see the DFIs and the private sector coming together and working more or less successfully together. It would be great to hear from you first. I know that most of us know the Trade Development Bank, but if you can share some of the highlights that TDB is doing, that would be very useful. And we would like to have your perspective on how the DFIs, on Stefan's points, can come together, work together, and what do they have to offer?
Thank you, Amin, and good morning to everybody. The Trade and Development Bank, for those of you who may not be aware of us, we are a development finance institution, but the T stands for trade. So we're a very big trade financier. It's a good half of the business that we do. And that could be very short term, like the commercial type banks that Stefan was referring to, but it could also be ECA mixed business that has very long term tenors involved. I think the industry, I think the report that was jointly sponsored by the two colleagues on my right is a very good overview of how the industry has been evolving. And I think there's no better word than evolve as a description of what's been happening. All the DFIs were members of the IDFC, all the logos you see on the walls. I mean, even when we started as a club some 10 or so years ago, you know, climate was there, but it was never there the same way it is today. So it's just, we've been ramping up, experience has been building up, technology has moved, the resolve, of course, at the political and shareholder level has also drastically increased. So we've all been moving, and I think that's the general good news, but I think as you were saying in your opening remarks, plus 10 per annum is not good enough. How do we get to plus 30? And I think this is where innovation becomes very important, and you know, whether it's business models or operating models, but also, you know, new instruments and new approaches. Blended finance is a very popular way now to try to move the needle, especially to attract partners in who wouldn't normally be involved. We're all doing that in different ways. I think the one thing one can, I think, safely say is even though the climate finance numbers are woefully inadequate from the analysis that everybody is referring to at this COP28, 3 trillion, we're not even half at that level. But even though the supply side is low and people are complaining about that, the demand side is very problematic, right? And this is where Stefan is talking about, you know, financial institutions, but it doesn't matter what kind of DFI you are, even if you do equity financing, there's limits to how much you can lead, right? So you have to work with sponsors. And I think that is also taking a lot more time than we expected, because, you know, it's very difficult for the real economy to move at the pace that sometimes the world is asking. And it's not that they shouldn't move faster, but I just think pragmatically, when you just look at what's happening, we all have facilities that are not drawn down enough because you're making the funding available, but even if you commit it, it doesn't sometimes disperse fast enough. And so I think that we need more specialized interventions, more upstream, and I think that's another very interesting area in the industry where we're beginning to see development finance institutions pulling up their sleeves and getting involved in riskier engagements at the equity level, at the project preparation level, at the project development level. Everybody's talking about that these days. If you went back 10 years ago, everybody is like, oh, no bankable projects. I'm here. You know where to find me when you have a project that needs financing. These days, just about everybody in the industry is saying, we will accompany you in the process of origination. We will help you take some of those risks upstream. And I think this is also happening in Africa. It's very recent that African institutions, have, of course, a lot less capital. We're much more constrained than the larger DFIs that are based in bigger economies. But even us, you're seeing us all, build out these new facilities that are really pre-financing facilities, a lot more riskier. It takes bigger commitments, but it's an indication of how much we're willing to do more. I mean, if you just look at one of the largest wind farms that was done in Africa about 10 or so years ago, even back then, before it was so popular to talk about blending the way it is today, back then the sponsors didn't have enough equity. So the banks had to come in and actually agree to put quasi-equity into the project. And that was not something that was part of the original design. But we were all very, solutions orientated, and we just looked at the sponsor and we said, all right, we know you're very committed, you have track record. You need us to put more equity in. A few of us looked at each other and we said, all right, let's put some equity in. And so you already had blending going on some time back, but that was more on the risk capital side. Now we're seeing it more upstream. And I think the other problem we're having that perhaps needs more attention at COP28 is, how can you get the last mile players? People talk about, regions such as Africa or parts of Asia, low income developing countries not, having that many climate finance projects. Everybody talks about the tiny percentages. It's very, very small. It's a couple of percent of the volumes worldwide that's in Africa. And if one wants to push funding to where it's most needed, your remarks, people have to get it, that you have to just take the risk appetite issue firmly in hand and take more risk. I mean, we live in a world where everybody is so fixated on ratings. Private sector is so, most African countries these days making so much noise about how they're being squeezed out of the market, Even countries like Kenya that historically have been considered to be attractive risks, even they struggle these days, So there's a lot of paradoxes out there. I think having the global community here talking about the issues the way we've been is great, but let me be honest with you. If you were really to take the pulse of the people out there in the low-income countries, many people feel that, this has yet to come to their part of the world, and that this is, all the best intentions being discussed, but in the reality, nobody wants to take risk, and it comes down to that. So we've had a lot of opportunities to crowd in private sector from Europe, from elsewhere, by bringing in guarantees, by sharing risk, by doing risk participation agreements in ways that are not conventional, and it's helped. Almost 1/3 of my loan portfolio has participation from the Lloyd's of London syndicates in the UK. Not many people would expect that for an African bank. So I sometimes say, well, that pool of capital is participating very nicely in my portfolio, and it's across the spectrum of sectors. So we are having successes, but I'm a very rare financial institution in Africa that's investment grade. You can count us maybe in one hand, and you're talking about a continent of 55 countries. Maybe Mauritius, Morocco are the only two, plus Botswana, 3 countries that are investment grade. And usually financial institutions are tightly coupled with the sovereign rating. So out of 55 countries, 52 are not investment grade. Even big global institutions like the World Bank, who we work very well with and we have a lot of respect for, they even have criteria where they can only go to a certain level, right? So they can't deal with counterparts who are single B rated, as an example, let alone the C range, and there's a lot of them in the C space too. So I mean, I think one of the pink elephant issues in the room is, you know, risk appetite. You know, where will we get to that point?
Thank you very much, and we'll go. So just a couple of points I want to. Where everywhere we see unite, act, deliver. You talked about trust. Trust starts with intentions, but it needs action and delivery to really build up. While working on this report, we looked at some reports, and just on your point on blended finance, a report which was issued in 2003, to your example on onshore. I think 90% of that report, unfortunately, is still relevant today in terms of issues, what needs to be done. And you talked about moving upstream, which, to your point, Stefan, can also maybe help on the risk of that second layer that you mentioned. You also talked about last mile, so upstream, last mile, that's why DFIs are almost everywhere. So before moving to your keynote, Stefan, on KfW and its role as a transformational promotional institution, I wanted to move quickly to the operating model from what Wendy was and 3 points I would like to have your reactions on. The talent gap, which is real, and we cannot just hire new talent because we need to also upskill the talent that we have. Would like to have your perspectives on how you've seen this evolving and how do you want to accelerate it. Talent gap, the role of digital, artificial intelligence, generative AI, how can these technologies be enablers? And last but not least, a word on the role of cultural change, because we're coming institutions, KfW is 50 years, long-standing relation and ways of thinking and ways of working. I'm sure that you're facing this challenge of cultural change. Would be happy. I know it's 3 tough topics and heavy topics, but if we can have your perspectives on that, maybe starting with you, Stefan.
Yeah, I would have been made this as a part of my keynotes because listening to you, there is a consultant inside yourself because you were mentioning the 3 key levers, IT, people, and culture. And that is important not only for us as institutions, it's equally important for Deutsche Bank or any other institutions to focus on these key levers, starting with IT. Also, we are a bank, we have a lot of legacy IT, which we need to transform. And we have decided this summer to have a 4-year project to transform the legacy IT because we can't rebuild them. But we need to start. If you don't start, the problem gets bigger. And that's why we said it's a long-term investment, but we need to start and do this. The second layer is, of course, digitalization and the application of artificial intelligence. We have started this. There is a strong commitment by the institutions that any new product will be delivered in a digital way end to end. It's not a lot because our partners and distribution partners, for instance, in Germany, would laugh that our old existing products will be digitalized, but we don't have the capabilities and resources. So we said, let's focus on the future. We can't change the past. I'm joined only 2 years ago, but the commitment is clearly on the future. And the application of artificial intelligence is a massive opportunity. There's too much, we speak too much about the risk, but in our society where we have a demographic shift, there's a lot of work which we can do much more effective and much more efficient with the application of artificial intelligence, i.e., we do more work with less people, and the work will have higher quality at least in our industry. That's my belief, and that will attract immediately from IT to people. If we create a work environment which is more attractive, we will attract better talent, but also there is a war for talent across the entire workforce. And that is a concern to me. It's not only a concern in Germany, but I just come from the South African panel. It's a huge challenge for a country like South Africa, where we have a youth unemployment of 55%. How do you educate these people? right? And education, it's not only good for democracy and progress, it's also necessary in order for the green transformation. You need real workers, you need engineers, you need software people, etc., etc. This green transformation globally requires skilled workforce. And thirdly, culture. I think we as an institution have a very strong culture, but we also will have a project next year. We call it a cultural journey, because I believe while we have a great culture, we need to adapt to this changing environment by creating a culture which sees change as an opportunity. And we need this in KfW, we need this in Germany, and we need this globally. Again, we focus too much on risks. Like your example, it's the same example. We need more a change in perspective and see the opportunities in the change. And the green transition is a great opportunity for social and economic progress in many, many countries, including the global south.
Thank you very much, Stefan. Wendy, maybe to you, as Vice Chair of BCG, looking at social impact and CNS, beyond the word of financial institutions and DFIs, could you share with us how do you see these same topics developing, technology, culture, talent across industries?
Yeah, I'll bring them right back around. And what you see is a great example of cooperation up here with one mic, where we are all forced to cooperate. Let me start with where you left off earlier, Amin, which is about trust. How do we build trust? It's with a better flow of transparent information. And what some of the new digital tools are enabling us to do is get better information more broadly. Admasu, you gave a great example of building wind in the early days. And I think what you said was, we knew the developer, we trusted, we had the visibility. How do we create the visibility that you had being proximate to that organization much more broadly in the world to bring more sources of finance to those kinds of opportunities? I actually think the technology we have, the digitization potential we have, advanced analytics, Gen AI, it allows us to build, when used correctly, more trust to bring more types and more sources of finance into these things where historically the information that was needed just wasn't getting disseminated broadly enough. I think that, for me, is the exciting part of what technology can do to build, not erode trust. I think on the people side, I think, Stefan, I love the fact that, the fluidity between private and public sector. We hear so much, all these last week and a half around public-private partnership. When public and private don't understand each other, when haven't walked in each other's shoes, it's really hard to make that partnership real. And the more flow of talent we get that moves back and forth from public to private, understanding the perspective and that responsibility of the public trust, and the private sector and the ability to sometimes historically be more adaptive and innovative into the public, that fluidity of talent, I think, is incredibly important in building across what we're trying to do together with the DFI institutions. And then just lastly on people, we are all rational actors. People respond to the incentives they're given. And so when they're given incentives that are all about avoiding risk and not making a mistake and never making an investment that fails, what do we think we're going to get? How do we incent people for being willing to take a little bit more risk in the spirit of knowing that there are things that we have to accomplish and knowing the only way we're going to move the world at the pace we need to move with the financing is a willingness to take a little bit more. And so how do we create incentives for all of us to do the thing that we know we need to do, but somehow doesn't always flow through into how we all feel like we're being evaluated sometimes? Being very direct.
Thank you very much, Wendy. I would suggest that we move maybe to our second keynote today with you, Stefan, to share with us. You shared already a lot on on KfW and how it started now. You shared about the tech roadmap, the people agenda. I'm sure that the audience would love to hear more about what are the strategic steering that you're giving to your teams. Would that be for the business model, internally operating model? And would that be also for the outside, DFIs, private sectors, governments, which we haven't talked about? Happy to hear from you. Yes, please.
5 minutes, right? So very quickly, as I said at the beginning, I'm now 2 years at the helm of KfW, and as you would expect from a new CEO, you start with a new strategy. We have called it transformation agenda because I believe you can only play a role in the transformation, which is the task of in this decade and for the generation, if you transform yourself. So transforming yourself gives you strength and credibility if you want to transform jointly with others. And the strategy starts with what are the key fundamental trends. All very simple. Climate and biodiversity on the one side, and digitalization and innovation on the other side. It sounds so simple and so beautiful, but it's then so hard to execute because we believe, and we are a global climate financial institutions, we are the largest financier in biodiversity, but we really understand it. Do we understand the ecosystem? Do we understand the role which we play? And that was the task of the strategy in both fundamental trends, to define our role and understand the ecosystem. I keep myself very brief. There's a lot of work behind it, and we have many projects to do what I just said and execute. The second layer is, how are we doing this? And there are 3 layers which I think is important, which also you find in the report. The first layer is clearly what we see 2 years ago, mobilization of private capital. Again, you can say not very creative and new, but it's so important. And all the reports and all the work I have seen the last 2 years have reconfirmed that this needs to be a core pillar of our strategy, because the public sector alone will not be able to provide the financing needed. So we need the new form which you described of partnerships, new thinking, fluid of talent, etc. Mobilizing private equities with new products, techniques, etc. The second element is impact management. Given the resources are very scarce, we need to understand and predict the impact of what we do. And we need better data, we need technology which builds trust and pays also in on mobilization of capital, impact management. And the third pillar is collaboration, which I said I do see a paradigm shift, that there is a great partnership. IDFC is a wonderful example which was created more than 10 years ago. This represents the global world. 26 members, and jointly we can make a difference. So let's win together and let's share the knowledge and be result driven. And biodiversity is a great example where KfW is the largest financier at the moment, but we have brought this into the group, we have formed task force, and that's why we grow. In the meantime, 80 billion in biodiversity in 2022. You can argue, not enough, sure, but we have started. And it starts slowly, and then hopefully we can scale. And the third Ella after strategy, second layer, how we do this, what does it require? And it requires an operating model which is effective and efficient, like for any institution, also in the public sector. And we want to lead by example as a public sector in terms of talent, operating model, risk management capabilities, and governance. So again, very, very simple for a bank, but hard to execute. And at the moment, we have more than 100 projects within KfW against this strategy. We see a lot of progress. We see a lot of interest in transforming in institutions with more than 8,000 people operating in 80 countries. And we want to play an important role because we are relevant. And from this relevance, I think we have a special responsibility to lead by example and focus on those things which really matters. So thank you very much.
Thank you very much, Stefan, for sharing these elements with us. One of the things you said before that I liked a lot is taking into account the voice of the ecosystem. You talked about the voice of the investors, but I'm sure we can enlarge the concept to other players in your ecosystem. That's why I'm turning to you, Admaso. From what you've heard, can I ask you to be the voice of the global south also, this part of the global south? When you hear this strategy, and when you try to say how, if we had to apply a similar one in other parts of the world, what are the things that you think make sense as they are for other DFIs in that part of the world, and what are probably some specificities that you would add?
Well, you know, it's a very interesting moment in this journey to net zero. We're all really grappling with the issues, and DFIs are a very key focus in that. Not that the private sector doesn't have a big role to play, but because of our shareholding nature, because we are there as public interest type institutions. I think the Global South has been trying to digest the sincerity, the credibility, and the trust. I think it's perhaps the most important word that's been said this morning, because really, I mean, you know, when you strip away the discourse, right, and the rhetoric, that's what you end up with, is whether people believe what you're saying, whether people are going to walk the distance with you, whether there's going to be fair burden sharing, right? These are the issues at the top of the mind of the Global South, right? Because the constraints are so profound, and even the basics these days are not even there. If you look at the latest reports on the SDGs, you know, we're on track with just 15% of the SDGs, and that is supposed to be a mainstream development agenda, right? Of course, climate is now also mainstream, but the SDGs have been, you know, underway for much longer, right? Climate has become increasingly a very top issue today. Everybody's aligned. But even the sort of more generic development issues are underwater in a big way, right? So I mean, I think there's a lot of reality checks that are going on when one looks at where development. We talked about climate finance, and there's a lot of talk about how we can get more of it to flow where it needs to go. But if you just look at ODA these days in development financing, right, that discourse in important forums like this does not match up with reality, because the reality is everybody knows where the money's going, and the money's going to new issues that just crop up overnight, and all of a sudden you see where there's political will, billions can flow in days, in weeks, in months. But you know, we've been hammering these issues for years, and somehow you don't see the needle moving a whole lot, right? But then you see other issues coming up, and then all of a sudden, you know, you see tsunamis of money going there. And so this is the trust issue, honestly. I think it is one thing that we can't come all the way to COP28 and not, you know, ask me to speak on the Global South, right? I'm not a controversial person. I'm a banker. I tend to look more at metrics and pleasing my shareholders and doing all of those things.
Thank you.
But I mean, and my partners, of course, you know, I make sure that I don't disappoint him, because he has to also deal with his stakeholders. So as the financial people, we're very disciplined, and we know at the corporate reality, you have to do your professional job. But when you look at the landscape and you look at the discourse, you know, there's a lot of disconnects, really. And I think maybe with BCG type clear thinkers, they're legendary strategists, maybe they can help the world be a bit more clear-eyed on how to deal with some of these disconnects, right? Because there is a big credibility issue, a real big one, and it doesn't get the attention it needs to, because a lot of folks just want to be seen to be playing their part and saying the right things. We all know that political correctness is the order of the day. Well, I think there's a term these days that's become very infectious. Anne-Marie, what's that? Woke, the term woke. You know, in social circles, it's become a very interesting term. And it you know, and sometimes it gets in the way of people being frank and pragmatic, right? So, I mean, for me, to be honest, I kind of find that they're very, very realistic partners that you can work with. I mean, it's not because he's here on the panel with me, but one of my best partners in Europe is KfW. And honestly, something that it's because of the culture, right? Because with culture comes understanding, with culture comes behavior, right? And we trust KfW. My colleagues are all nodding because whenever you mention the word KfW, people feel it's worth the effort. You're not going to go a long distance in engagement and then find that there were a lot of hidden issues that weren't transparent, to come back to your point of transparency. You know, so I mean, it really matters a great deal, and I think for us as Africans, we have a very good, you know, recent history with Europe. I think Europe is coming more and more to the party. We're seeing a lot more sincerity, big initiatives, and so it's much more hopeful today. I just think there are some who try to be holier than the Pope and make life very difficult for us. You know, so the whole thing is greening. Greening is a verbalized word of a noun. Green is a noun, but greening is a verb. It means it's a transition, right? And so you expect basic logic to apply and people to understand that you're moving in a process. We are working very well with the World Bank Group these days, and they followed in the good example of KfW. They were not always our big partners. Today they're very big partners. Maybe you helped show the way, Stefan, you and team. And it's great to see the World Bank, you know, coming to us and saying, you know, we know you're a big institution, the transition is the reality, but here's what we can do. We can work with you on building special purpose vehicles to address green housing, to address green transport, electric mobility. You put in 5%, we'll put in 95% of the funding. You're close to the ground, you have visibility, you know. Let's get away from this old mentality where if you're not coming from a AAA background, you're not relevant, right? So now the big players are all really coming into the party and saying, you know, in this last mile environment, you guys may not be big, but you're relevant. Yeah. And we need to work with you to put wind underneath your wings so that we can, you know, get that momentum. So I think there's very bright spots out there, but there are still occasions where we have to push back. We have some folks who just say to us, you know, it's almost like there's no transition, and they say, we want you to be green overnight. And I'm like, you know, if you have a magic wand, lend it to me and I'll become green overnight, but nobody has a magic wand. So sometimes there's that lack of sincerity where you kind of find that people are being too hard on you, and then you're saying, well, I'm the smallest part of the global problem. Why are you being so hard on me? Maybe you should be a bit more fair.
Thanks a lot, Masu. Very well said. And it's amazing to see that it all comes down to scale and speed, even on trust, because you gave a great example of a relationship where trust exists, and what we need is to have it enlarged to all institutions very quickly. Stefan wanted you to come back on one topic, because you talked about biodiversity, and with just my hat as working with financial institutions globally, I must confess that in the private sector, and don't get me wrong, some of the banks are trying to go into that space and to do, but the majority is still pondering how to deal first with climate, so let alone biodiversity. How do we measure it? We don't even have scenarios, etc. It would be interesting if you could double down on that and tell us what made you and KfW take that decision and go for it at this scale ahead of everybody.
Yeah, a lot of people say biodiversity is the sister or the brother of climate, or the other side of the coin. In different words, you need to think climate and biodiversity together. If you look at the data, without biodiversity, the CO2 budget, we would have crossed, I think, in the 80s already, the climate change, right? So biodiversity is paying massively on CO2 reduction in a big way. And it's the issue with biodiversity is its complexity, its multi-dimensions. According to the Potsdam Institute, it has 9 dimensions, biodiversity, and that makes it so difficult to translate this into KPIs or into investment behavior. Is very, very tough. We are working hard to do this. Given our new strategy, we are working on a biodiversity roadmap which once finished, we will definitely share and encourage people to think in any investment process the biodiversity implications. And that's equally important. If we win the climate race but lose the biodiversity race, we are gone, right? And that is something which we can't repair. I don't want to go into any details. And it's not about just investing into a forest or into the Amazon. It goes much beyond the things which are in the public domain. And it scares people equally as climate change. And if people are scared, the normal reaction is you don't want to hear about it. The psychological reaction is very difficult. So we need a positive narrative why biodiversity is a great game changer for us on this planet to save this planet. It's just, unfortunately, that's unfortunately the truth. Yeah.
Thank you very much. Second time you're talking about opportunity, we can also see that you have a soul of a banker, even private banker. And I love a lot this mindset, because opportunity is a positive narrative that gets people moving much more than risk, which also is on the table. One question to you, Wendy, before we move to your keynote, and Masu, around, because when Stefan was talking about his two key priorities, I was thinking about the two moonshots of BCG, which are climate and sustainability on one side, and digital and artificial intelligence. You're part of the leadership of the firm. Can you tell us more about how a different kind of institution is looking at these two topics?
Well, I'll be very brief because I know we're all trying to run to the next thing. But in terms of BCG, Amin mentioned we're focused very heavily on AI and climate. But as we've talked a lot about many of the topics today, the intersection is incredibly important. And so where I actually spend a lot of my time is, how does AI come in to accelerate climate? How does climate come in to actually be the best use cases we can for the development of AI? So we've launched something called AI for the Planet in partnership with the UN. It's how do we actually bring all of those AI startups into scaling to make a difference on climate? So I would just encourage us all, in the spirit of brevity at this point, is how do we push the intersections between all of the topics that we're talking about today in a way that enables us to trust, to see, and to do more faster.
Thank you very much, Wendy. So I propose that we move to our third keynote with you, Masu. Let's take 5 minutes, if you agree, and then we'll open up. I know that all of you have many questions. We'll make sure that we have 20 minutes to take some of your questions and try to answer them as good as we can.
Always helps to stand up and get the blood to circulate. Very quickly, I think this exceptional report that we have been discussing also really reflects in many ways the pattern of our journey as TDB Group, where we started to see these imperatives building up. We've all had ESG in our strategic spaces for quite some time, but it's been building up. And the question, I think, around business models and operating models is, to what extent have you now mainstreamed it and scaled it up within your space and giving it? And we actually had a very interesting experience when the first SDG conference took place. I think it was around 2015. And if those of you who know the global goals, there was something called MDGs before the SDGs. And when the SDGs came along, climate became quite important in the mix of goals. That's the first time we started to really change our business model and our operating model to introduce targets and to incentivize and to do all those things that you do in a sort of institutional framework space to get the rhetoric to become reality, right? So you start doing all of the rewiring internally, hard and soft. And of course now it's a second iteration, because after the Paris Agreement we realized the SDGs did put emphasis on these issues, but not enough, right? And so now we're all talking about deeper alignment and bolder action and all of that. So one of the things we've done is we've said, well, we are at roughly $9 billion asset financial institution, we can't change our portfolio overnight, but we're going to introduce something called green shares. And everybody is very familiar with green bonds because it's very topical. Green shares is not as topical. It's been out there for a while too. And we've been really trying to sort of rise up to the occasion by saying, we're going to start attracting a very specific type of capital that's going to now dedicate itself to climate and green finance, and we're going to do it in a way where we can guarantee that multiplier effect, because we all know that that's the nature of equity. When Stefan talks about 40 billion of equity and a balance sheet of 600 billion, you understand the power of leverage. And that's what we tell investors. We tell investors, you put in $10 million of green shares, we'll guarantee $30 to $40 million of green assets on the back of that. And we've now rolled it out, and we had our first announcement of a first investor that came in at Sharm el-Sheikh at the Africa COP in Egypt last year, and now we're rolling it out. And some of the very good investors who are not very profit-minded like the profit because it's a signal of health, but then at the same time they've said, instead of paying us dividends on these shares, we want you to create a special facility, put that into that facility and go upstream and do the heavy lifting. And we're going to give you very fit for purpose funding where you can actually go help the developers, help the real people on the ground who struggle to put these projects together and make them feasible. And I think this is something we're looking to scale up. And now the new area we're going into beyond Green Plus shares. And the reason we call it Green Plus is because we said that the good should not be the enemy of the best. So we said sustainability and climate alignment are cousins, and one should not exclude the other, right? So that's why we say Green Plus shares, meaning if there's SDG type transactions, we can also do bits and pieces with that. But anyhow, just now we're looking at hybrid capital. That's a new, very topical area in our industry. For those of you who follow our industry, it's happening at the global MDB level. It's going to happen at all the other DFI levels as well. And we are very actively now engaged with a number of partners to see how we can bring in that hybrid capital and use that also to advance some of the greening of the capital within the institution. Not that it should, choke out all the other things that you still need to do as part of a transition, but you do it in a way where you give your new partners that dedicated impact that they want to see. And it's something that they can report back to their shareholders and build that confidence that these COPs mean something, right? There's new capital coming in, it's having multiplier effects. And some of the foundations these days are also coming in and doing much more upstream, which is where we have to move up in our industry because it's a very uncomfortable place to be. And this is the problem with our industry is, we happen to be fortunate because we're the ones holding the treasury chests, and anybody who wants it needs to knock on our doors, and we're the ones who say yay or nay. It's different for the others who are trying to always rise up to your approbation, and they have to actually put things together and make it work. And it's very hard to make things work on the ground, right? And I think this is where we are increasingly going also as TDB, is to say, let's not sit too comfortably in our treasury chest position and tell people, no, you don't cut it, come back, go do more homework. Try to be a little bit more part of the solution where you reach out and take a little bit of risk. There's a lot of interesting instruments that have come up in the industry over the years. Stefan talked about blending. There's a number of ways to blend. He talked about the first loss pieces, which have been quite reasonably effective, but there's many other ways of blending as well with the private sector. And we're finding ways and means of doing that. And just maybe a final note for you on TDB. Some of you may know that there's a lot of noise out there about crowding in this trillions. Everybody remembers the billions to trillions, mantra that came out with the sustainability goals. And we decided very specifically to go and knock on institutional investor doors and ask them to join the party. And it wasn't easy, because institutional investors would be happy to join Deutsche Bank, because they know Deutsche Bank is a much more reliable investee company to generate dividends and be more commercial in its nature, because that's how a private institution should be. As a DFI, it's not easy to attract institutional capital in the same way. But we managed to convince one, and then one became two. Today we have over 20 institutional investors in our capital. We adjusted our capital structure. We introduced new segments. We introduced Tier 2 capital, which is not something that is common within the DFI world. You'll find it more in the Deutsche Banks of this world, but we are also trying to learn from the commercial banks who do a pretty good job at structuring capital. They're very innovative in that regard, and so we've been doing that quite a bit, and we're looking forward to work with partners such as KfW and the other IDFC members around, taking bigger positions on the risk capital front, maybe on the hybrid side. That's the hottest area right now in our industry, for those of you who are interested. There's been some announcements at this COP. We expect even more announcements in the years to come. Even the heavy MDBs, the World Bank, the African Development Bank, they're all moving into hybrid capital out of the G20 recommendations. And hopefully in 2024, we'll announce our first hybrid capital. So yeah, I hope to share more with you in due course. Thank you.
So we have some time left. We can take some questions from the audience, if any.
Joining the cooperation with you and just taking the same mic again. Yeah, my name is Sebastian Brennes. I couldn't echo the comments. When I used to start as a consultant with Booz Allen, I worked operationally, sold the company, and now run an NGO in Ethiopia working with smallholder farmers in the rural area. So I personally experienced a complete misunderstanding between Euro and Africa still, and the lack of risk-taking on the European side of actually investing in Africa. But recently I've been thinking, isn't the contradiction in terms that we have bankers talking about climate, where climate or nature is not even an asset yet? It's a bankable asset. So can we actually expect to change anything more until nature becomes the bankable assets on the balance sheet? Isn't that the game-changing element? So where are we on that? Because that's going to turn Africa into an absolute rich country in terms of collateral once you start measuring the ecosystem's value as a capital. And of course, this is a question for regulators, more for auditors to actually design the concept. I mean, with CO2 carbon pricing that has started, but we see the difficulties of actually putting a price into there. But wouldn't that be something bankers should promote to turn this narrative much more to actually more investable assets in Africa or elsewhere?
Thank you very much. It can even become a rich continent, not just country. Stefan, do you want to take this question?
Thanks. No, I would answer it in the following way. I think, unfortunately, the world community is not prepared yet to move to a CO2 pricing model or to biodiversity credit model. At the end of the day, behind your question, I understand how can you monetize and price the external positive and negative effects. And that would mean, for instance, if you have biodiversity credits for the global south or many African countries, you would have a wonderful source of refinancing. We as KfW are promoting both CO2 pricing, and I think Germany is a leading voice in Europe as well, and also our current government with the climate fund, which I think is great, but we are not yet there if large countries are not willing to commit. And also Europe is not moving the CO2 pricing massively upwards. And you know all the numbers, right? We would need to go to 150 ton probably to have the market solving with the problem. In terms of biodiversity, we have created with the German government the Legacy Landscape Fund. You may have heard about it, where we have more than 200 million government money, and we are currently in debate with large institutional investors to provide money and also think about private biodiversity credits. And there is an interest also from large American firms, for instance, to start and support this project. So we are moving ahead. I think it's fantastic. It would solve a lot of problems if we would have what you have in mind. I can't say whether we will move there in 10 years, in 20 years, or we will move there everywhere. From a game theory perspective, it's very, very hard to solve.
Just one small add, it's very early days, but the encouraging sign I see is in recent days with the launch of the TNFD, which was creating more transparency and disclosure around the nature-related dimensions, with the creation of the science-based targets for nature, right? Not just the SBTI for climate. I think what we're starting to see are some of those institutions building post what we saw with the Montreal Kunming and the commitments that were made there. So not nearly the state of maturity that we have with climate, but I think the creation of those institutions and those commitments are the starting point for being able to move towards more of what you're talking about, Stefan.
Let's take two questions. You have the mic, and then we'll hear from Deutsche Bank.
Thank you very much. My name is Eugene Itwa. I'm the CEO of Natural Eco Capital. And good enough, you've taken one of the things I wanted to say, for the fact that the rich resources we have on the African continent, and indeed everyone is scrapping to come to the African region now, I think should be the foundation for sustainable investment for us. But in addition to that, you talked about impact measurements, you talked about better management, you talked about voice of ecosystem. And how do we evaluate? In a number of your statement, you asked how. It came out outstandingly. And I was just thinking that one of the ways I guess we can rein in everything is using, because you also talked about the SDG as well. I think we have the SDG IPA standard that are voluntary internal management standard that can be used in harnessing or embedding sustainability and indeed the SDGs into decision making. And I think using this tool or framework will support all of us in embedding all these things, beautiful statement we've all made. I'm a trainer in that regard for UNDP, SDG IPA standard. We can all Google it and check what it's all about, and you see that it will actually support us in that internal decision making. And coming out well to get all these things well embellished in what we are doing. So let's look at it and see how indeed we can enrich our internal processes with a view to supporting the external world. Thank you.
Thank you very much.
Yeah, thank you. I'm Jörg Eigendorf, the CSO of Deutsche Bank. I think your question was just great because it is, and I'm a little bit more optimistic after the last couple of days, and I want to connect it also with a question to Ed Masso Tadisi. But I think, and maybe that sounds unusual from somebody from Deutsche Bank, but I think we've seen market failure here for the last 50 years in not being able to integrate the externalities into our pricing system. And we don't have 10 more years to go. And if it's a way to, we personally, we as a bank think that nature-based solutions could be a way for a lot of the struggling countries. You mentioned them, 52 or 55 countries are below investment grade. That is a way, with the support of the international financial institution, financing institutions, with the support of the private banks, with the support of investors, with the support of the insurance companies, with the support of the NGOs, and that already shows how differently we have to think. But that my question is now, how are we going to tackle two issues? First issue is the governance issue we often face, because you are investing into countries which may have a governance issue. And the second issue is, how do we tackle the point that we really need the communities on the ground to benefit from these financing, and that it is not siphoned off away among, the first who really make money from nature-based solutions are the lawyers. Before we have made any money, the lawyers are rich. And how do we get, and until the money is where it should be, we see so many things taken away. And how are we going to tackle this issue more effectively? I just have to say, after my COP here, I'm much more optimistic. We have leapfrogged. I think there's a new asset class arising, but I think it needs a lot of thinking how we can work together better. But we need to tackle these two issues, the governance issue and where does the money end?
Well, you left the hardest questions till the end. Governance is a big question. I think it's a gray area, clearly, because there's been a lot of mobilization to improve governance, and there has been successes, but the truth is it's still a journey. And I think the best way perhaps to deal with it is to reward and create examples, and and that way the incentivization mechanism kicks in, and those who are sitting on the fence see this and they say, well, maybe it pays to deal with governance. And so there's a number of African countries that have been very successful with governance. I was just in Botswana yesterday. I arrived also at 4 a.m. this morning. One country that's also done quite well, Mauritius, countries like Rwanda, pushing discipline very hard and trying to deal with this whole question of coherence around the system to make sure things actually get through to the final beneficiary. It's not easy, because I think sometimes the philosophers on governance don't realize that there's something called capture, right? Value capture. And I think the private consultants often talk about capturing value, right? And I find that, you really need strong leadership to be able to ensure that that value doesn't get captured down the route. And that sometimes, it's not very popular these days to be a disciplinarian, right? In a liberal world, if you're a disciplinarian, you're a bad person, right? But that's the only way sometimes to ensure that the system is coherent and you don't get this hijacking that happens along the way. I mean, that's really the governance story, right? You say all the right things, you kick it off, and then it gets diverted in all sorts of ways. And if you don't have somebody who's, playing that inconvenient role of being a bit tough, it'll be a free-for-all, right? And that's the problem sometimes with, I think, the South. Sometimes when they look at the debates around governance, they say, well, maybe we need strong leadership to help ensure that things can happen a little bit. If you keep it too loose and too soft, then it's going to go sideways, as it often does. I think the best thing one can do from a pragmatic perspective is just reward those who are doing the right things, and then at least you realize that it creates hopefully a vortex where more and more will start adopting that right behavior. We've actually been beneficiaries of that. We've received billions and billions of dollars of financing over the years because we really paid attention to our governance. We did a lot of things that were not easy to do, but we did it. We got our shareholders and our stakeholders to back off a little bit so that there can be autonomous good governance at the institutional level, so you don't have too much political pressure coming from far where you start, doing things that are not, considered to be, wise at a governance level. So I think that's the only thing one can do. But maybe for another conversation another day.
Thank you. Wendy, maybe? Thank you, Massimo.
I would just add very briefly, we've talked a lot about technology and how the cutting edge of technology is our friend in this. I think what we are seeing in terms of platforms that are able to provide the visibility and the assurance about where the benefits and the value are being shared, specifically with the farmers and the fair wages as things come through the value chains, I think is a tremendous innovation that's going to help with the right governance in place, some visibility and some strengthening of the shared value.
Thank you very much. We're at the end of our great discussion. I'm sure that we all have great takeaways. I'm personally taking away 3 things. The trust notion, it exists here and there, but it needs some massive scaling, and it needs to be accelerated. I liked a lot the transform yourself before to be credible and transform the others. And it's great to see the larger DFI walking the talk and doing it. And I also, my third takeaway from you, Wendy, is keeping ourselves honest and looking at the nitty-gritty, looking at reports, the incentives, the metrics that we're putting on our heads. They need also to be aligned with this ambition. So for all these takeaways, a huge thank you to our three panelists. It was very insightful. Thank you very much. And please have a look at the report.
What is IDFC Climate Facility? Created in 2019, the facility has been supporting IDFC members in enabling knowledge exchange and offering capacity development on climate-related topics. Our 3 goals: to strengthen climate finance expertise and capacities, to originate and develop joint climate projects, to institutionalize and facilitate collaborative work among members on climate change. Our activity lines: knowledge sharing, capacity building, access to international climate finance, joint business opportunities. In the past couple of years, the IDFC had been supporting members in mainstream common principles on mitigation and adaptation, developing a framework for the operationalization of the Paris Agreement alignment, promoting a mentoring program between institutions, delivering climate toolbox including GHG accounting, climate risk assessment, Paris Agreement alignment and climate strategy, offering trainings on climate risk assessment, climate strategies, and adaptation, supporting events and partnerships to the international agenda, mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030 and beyond. What is IDFC? The International Development Finance Club, created in 2011, is a network of 26 public development banks. Our mission? Speaking with a common voice, to leverage a